Hello all, I am Dr.J.Pavithra, Associate Professor, Department of Management Studies, School of Management and Commerce, Bharat Institute of Higher Education and Research. In this video, we are going to discuss on the fund flow and cash flow statement analysis. Let us move on to the learning objectives. Here we are going to be studying on the concept of fund flow statement, the objectives of fund flow statement, importance of fund flow statement formats, meaning of cash flow statement, objectives of cash flow statement, advantages and limitations of cash flow statement, cash flows classifications and cash flow statement format. Let us move on to the first meaning of the fund flow statement. What is this fund flow statement? A fund flow statement is prepared in a summary form to indicate the changes that is going to be occurring for the financial conditions between the two balance sheets. From the two balance sheets, we are able to have the ascertainment of the changes in the funds that are recurring for the business conditions. What are the objectives for this fund flow statement? The first one is going to be to find out the position of working capital changes of the given 2-year balance sheets. So here the 2-year balance sheet of the liabilities and assets will be given. From that we are going to ascertain about the current assets and the current liability position, where we are able to make changes in the working capital, which is the difference between the current assets and the current liabilities. Next, to know the changes in the working capital during this period. So, during the given period, the changes in the working capital are going to be highlighted, whether there is an increase between the 2 years of comparison between the current asset, or whether there is a decrease in the current asset, or whether there is an increase in the current liability and decrease in the current liability, which is going to be affecting the flow of funds. The third objective, to know the changes and the causes of the changes in the working capital. What are the changes that has taken place in the current assets and the current liabilities, and what is the cause? Whether when the current liabilities are getting increased, the liabilities are more, then how they are going to be managing the obligations for the business. When the current liabilities are low, how they are going to be making some investments for the other extra working capital. The fourth objectives, to know the inflow of funds according to their sources. So in this fund flow statement, we are going to be not only assessing about the working capital need and changes, and also we have to find out what are the sources of funds and the uses of funds. And the final objective, to know the item wise outflow of funds during the period. So when we are having the 2-year balance sheet, from that we are able to find out the working capital changes position and also the fund flow statement of the sources and uses of funds, which is called as the fund inflows and outflows during the period of the 2 years. What are the importance towards the fund flow statement? So there are 4 importance, where we have the first one, importance of the management. So when we are stating about the fund flow statement, it is going to be highly useful for the management to identify the changes that are taken place in the working capital, and also there is another process like the adjusted profit and loss account. What are the provisions that are to be made, that can be stated here. Importance for the shareholders. So when knowing about the current situation of the business, what is the fund usage and the fund outflows for the business, which can be easily judged by the shareholders for investment of their shares. Next is the importance for the financiers. As in this working capital nature and the changes are going to be given highly importance. So here the financiers are going to be knowing about the determination whether there is a increase in the current assets or decrease, whether there is a current liability decrease or increase. With that position of the changes in the working capital, they are able to give the working capital financing. And the next is importance to other parties. So other parties may be the creditors or the customers and the other people who are and the government who are wanting to know about the changes in the fund inflows and outflows patterns, and also what are the provisions for the taxation, the proposed dividends are going to be made with respect to the changes in the working capital as well. So these are the four importance for the fund flow statement. We have the other side, which is going to be the negative side of or the limitations of the fund flow statement. So here the limitations are going to be, here they are stating it is not a substitute of the annual accounts. So generally the annual report are preparing the income statement and balance sheet. However, this is going to be only giving the usage of the funds and the sources of funds, and it however cannot be a good substitute for this annual accounts. Second, it is taking only the historical data such as the past 2 years or the current year and the previous financial year, in which it is going to be taking the previous data only. And the third is less importance to the changes in cash. So here we are taking utmost importance for the working capital nature. So we are ignoring the cash purposes, and so that there are less importance are given to the changes position in the cash. And the next is going to be not an original financial statement. However, we are able to find out the changes in the working capital, the adjustments that are related to the non-operating items, and also for the fund flow statement. We are unable to determine about the originality that is there in the financial statements. And next, they are going to be ignoring the non-fund items. So we are taking only the funding items and not fund items are being ignored. So these are the limitations for the fund flow statement. How to prepare the fund flow statement is, there are step-by-step process in which to prepare the fund flow statement. So first one, they are going to be taking the balance sheet. So the balance sheet of the 2 years has to be known from the balance sheet of the beginning year or the previous year to the current year, and the balance sheet and the current year. When you look about this annual report in the company, we are able to find out 2 year will be given, such as 2019-20 and then 2018 and 19 will be taken into account for the balance sheet. Next, we have this income statement and for the current year and also for the previous year. And for this information relating to the formation of the fund flow statement is going to be effective towards taking the analysis from the balance sheet, and also the income statement is going to be the foundation to be preparing the fund flow statement. So first of all, the first step in preparing the fund flow statement is going to be showing the statement that is changes towards the statement of the working capital. So here it is a statement format is being given here. So the items of the current assets are given. So here the current year and the previous year are compared. So any changes, whether it is going to be a decrease in the current assets, they are going to be shown in the decrease column. Whether if it is an increase in the current asset, we are going to be showing in the increase column. So here the current assets are listed below: the cash, bank balances, various accounts receivable, marketable securities, inventories, and the prepaid expenses are taken as the current assets. After which we are going to be totaling the total of current assets and then coming to the current liabilities. We have the bank overdraft, accounts payable, creditors, outstanding expenses. All these are going to be showing the different. However, if you take the current assets, there is a process. There is a current asset. It is an asset. So when there is an increase in the current asset, there is an increase in the working capital. In the last two columns, we are able to find out what is the changes that have taken place with related to the changes in the working capital nature. When we talk about this current assets, we have to be showing about generally the current asset is an asset or the resource for the business. So when the current asset is getting increased, automatically the working capital is going to be having an increasing in the position for the business. But however, when we are talking about the current liabilities, so current liabilities, it is a liable for the obligations to be paid for by the business to the others. So here the current liabilities, when there is a comparison between the 2 years, for example, we can take the creditors. The creditors amount for the current year is 20,000 and the previous year is going to be 30,000. So from the 30,000 it is 20,000, it is getting decreased, and here we have to show in the, when there is a current liability is getting decreased, there is an increase in the working capital. So the obligations are being fulfilled by the business. So naturally there is an increase in the working capital. And however, if we take about, for example, the bank overdraft. For example, we take the previous year of 20,000 and the current year as 30,000. Here there is an increase of 10,000, which is the adverse side for the working capital changes, where we have to state that if there is an increase in current liability, there is a decrease in working capital. So this is the formula or the rules that has to be followed or applied when we are calculating the statement showing the working capital. So when we think about this current asset, we have to remember that the current asset will not show any changes in the working capital. If there is an increase in the current asset, same increase in the working capital. If there is a decrease in the current assets, there will be a decrease in working capital. But when we talk about the current liabilities, it is an adverse position. And we have to state that when the current liabilities is getting increased, the decrease in the working capital. When the current liability is getting reduced, it is an increase in the working capital. Then after calculation of the increase or decrease positions, we are able to find out about the total current assets and the total current liabilities, from which we are able to find out what is the net working capital, which is the current assets minus the current liabilities, where we are have to talk about the difference between the 2 years, whether it is an increase or the decrease. We have to come to a conclusion. So next is going to be the second step. We are talking about the adjusted profit and loss account. If we talk about this adjusted profit and loss account, so this is the second step where we are able to make the provisions for the business. So in this adjusted profit and loss account, we have to take the other expenses or the other items into consideration. So we have, it is a ledger account where we are preparing in order to find out whether there is a funds from operations or funds lost in operation. This is the format in order to prepare the adjusted profit and loss account. So on the debit side, we have to show about the expenses, the write-offs, about the goodwill, the preliminary expenses, discount on issue of shares or the debentures, whether there is an interim dividend that is going to be paid, depreciation is there for the assets, whether there is a provision for taxation, proposed dividend and other reserve funds. And then after coming to the credit side, we have the opening balance. So this profit and loss opening and closing balance will be shown in the balance sheet. And from balance sheet, we are taking the opening balance, which has to be shown, since it is an adjusted profit and loss account and not the original profit and loss account. So we are taking this profit and loss account as an adjusted one, and the balance of the opening balance has to be shown in the credit side. And then after, we are checking what are the incomes that are received by dividend received, profit and or sale of fixed assets and the profits, and after which we are able to arrive, and the closing balance from the profit and loss account has to be shown in the debit side. The opening balance of the profit and loss account has to be shown in the credit side, and the closing balance has to be shown in the debit side, from which we are able to arrive the balance, which is going to be the funds from operation or the funds lost in operation. Normally we get only the funds from operation, which is the profit for the business. Next, the third final step is, after arriving at the statement showing changes in working capital, profit and loss adjusted account, we arrive with the funds from operations. The third step is going to be determining the statement showing the fund flow statement, where we have the two sides. When similarly to that of the balance sheet, here we have the two sides, which is going to be the sources of funds and applications of funds. In the sources, what are the incomes for the business, that has to be noted down in the sources of the funds. And in the application, what are the payments that are to be made, that will be recorded in the applications. This is the format for making the fund flow statement. So here we are stating about the sources, where we find out about the issue of shares, issue of debentures. All these items will be given in the balance sheet between the 2-year period. We have to find out whether there is an issue of shares. On the next right hand side, in the application side, we find that there is a redemption. If there is an increase, we are going to be taking the issue. So further down, the investment of the shares is going to be given for the business. And if we take the redemption of the shares, here we are having the reduction in the shares. That is going to be the redemption of the shares. Issue of debentures, when the company is going to be issuing the debentures from the previous year to the extra amount of the current year, and redemption of the debentures for the application side. And here we have the long term debts and the debentures that has to be taken, and the repayment of loan that has to be shown in the application side. Next we have the sale of investments. When there is a sale of the investments between the 2 years, we have to find out sale of fixed assets, if there is anything, any of the fixed assets such as the land and building or the plant and machinery that has been sold from the previous year to the current year, has to be shown here. And the next sale of fixed asset, trading profit, and the net increase in the non-trading incomes has to be shown. On the other side, we have the applications, which is going to be the redemption of shares, redemption of debentures, then repayment of loans, and the purchase, whatever the sale that has to be taken in the sources, and the purchase that has to be taken in the applications. So purchase of investment, purchase of fixed assets, any payments of the dividends, payments of the tax. Finally, if we have the fund from operation, that has to be shown in the application side, and other non-recurring payments. And if there is an increase, so net working capital increase has to be also shown in the application. If there is a decrease, we have to be showing in the decrease side. So far we have looked about the fund flow statement. Now let us go into the cash flow statement. So these are also an important tool for the management accounting. So we shall move on to this cash flow statement. What is the cash flow statement? It is a statement which picturizes the changes between the cash position from one period to another period, and this cash flow statement is going to be giving the detail about the changes that has been caused with related to the cash items that are going to be described here. So here we are stating only the cash operating items that are to be stated, whereas in the fund flow statement they are going to be suitable for the changes in the short term requirements, and that is why they are going to be noting down about the changes that has taken place in the working capital. But on the other side, in this cash flow statement, they are going to be checking only the cash flow of the business. Next, we have the cash flows. So where we have the cash inflow and outflow, which is going to be the cash flows, which is movement of the cash in and the cash out of the business. Sometimes it may be the cash and also the non-cash items that are there for the businesses. So here we are representing about various payments of the cash inflows, and respect to only the cash outflows are being taken here. They are given an example such as the purchase of machines, of the payment of the cash outflows, and the sales proceeds received from the sale of machinery is a cash inflow. So when there is a purchase, similarly to that of fund flow statement, we have the cash inflows and outflows. So next we are having the what is the purpose in which we have to prepare this fund flow statement. So this purpose is going to be the bringing about the company's position relating to the receipts and the payments that are being made down for the specified period. So this gross receipts and the payments will be made so that the proper cash flow is going to be made in a for a particular position will be known for the business according to one of the following classifications. So there are various methods that has to be taken place in order to calculate this cash flow statement. So this classification has been segmented into three categories, which is going to be the operating activities, investment activities, and the financial activities. So here what are the changes that has taken place in the three activities are going to be described in the various classifications, and you have a detailed overview about how the cash is going to be represented with relating to the three activities changes. What are the various advantages of the cash flows are here. So the various advantages such as the cash flow is going to be helping for the management so that they are able to ascertain about the liquidity and profitability of the position of the business. So when the cash of the inflows and outflows are being measured, a proper liquid position easily convertible in terms of emergency situations can be found out, and liquidity is where they are going to be able to ability to pay the obligations as soon as the since the cash flow statement is going to be predicting about the cash position of the firm and also making the payments, which is also helping about the liquidity position and also for the profitability position. So when the adequate cashes are there in the business, whether it is going to be the cash in hand or bank, they are going to be having a good position for the business. Second is going to be ascertainment of the optimum cash balance. So the cash balance, that is both the inflows and outflows, are going to be ascertained and the proper balance has to be maintained. When the cash flow statement are being prepared, it is being easily having the rectification such a way that they are able to look about the cash position for the business and to ascertain the optimum cash balance of a firm. When the optimum cash balance is there, they are able to make the ascertainment of how much cash that is being remaining in the idle or excess cash or cash shortage can be noted down. After making this cash position, they are able to make the management of the cash. So when there are more highly idle funds that are being there, they are able to make the necessary changes for the business. If they are having the shortage, what they are going to be doing, they can have a look about it. Then the third is going to be the cash management. The proper cash management can be done by preparing the cash flow statement. So it is able to estimate about the inflows and outflows of the cash for the businesses, and which will be able to make the futuristic plans. So when they are having the more inflows for the business in the three activities, they are able to judge about the business and make more investments and more expansion for the business and the growth of the business. When they feel and find out that the cash inflows are generally less and the cash outflows are more, they have to be controlling about what are the costs that are being incurred and the expenses that are going to be incurred for the future has to be controlled. So next we are going to also focus about the movement of the cash, whether the cash flow statement is being prepared so that they are able to find out what is the movement between the flows of the cash and for the futuristic estimations. Next we are also taking the performance appraisals. So the projected cash flows are also available for the futuristic purposes, and the reports are also made with relation to the cash, and if any unfavorable situations are being found, the rectifications can be located. The variance that is being deviations can be identified and reduced. What are the disadvantages of this cash flow statement? So the cash flow statement is generally showing only the cash position of the business, and the cash inflows and outflows are only taken into consideration. The cash balance of the statement cannot be exceeding the true liquidity position cannot be outlined. Next, we have the net cash flows, which cannot be disclosed by the cash inflow statement and cannot be necessarily made for the net income of the business. Not necessarily this cash flow statement can highly be recommended for the net income or the profitability of the businesses. The third is does not give a complete picture of the financial position, as it only takes about the cash position. The preparation of the cash flow statement is going to be only for the post-mortem analysis. So after incurring all the expenses, income, the analysis after the audited results, only the final judgment of the cash only can be made, so that it is just the analysis only suited for a final overview, and it is not a substitute for income statement as stated like the fund flow statement. So fund flow statement is generally for the funds for the short term, and however in this cash flow statement they are going to be checking about only the cash inflows, and the accuracy of the cash flow statement is based on the balance sheet. So when the balance sheet is having many errors or some not rectified errors or some malpractices, fraudulent things are being recorded, so it will be giving a wrong picture about the cash flows. So various classifications of the cash flow statements are available. So the three classification, which is called as the cash flow from operating activities, investment activities, and the cash flow from financial activities are going to be segregated. So here the three activities are going to be separately given, so that it will going to be highlighting what is going to be the inflows and outflows for the betterment of the investments or the betterment of the financial activities, and also for the other operating activities as well. See, in this investment activities, the knowledge of the cash flows relating to the investment is highly essential, and the cash flows that is going to be known for the creation of the future incomes can be noted down from the investment activities. So, in this investment activity, the cash inflows and outflows are given here. So, the sale of assets, which is going to be the property or the long-term investments, the receipts from the incomes and the dividends, and the proceedings from the other sources of the preference shares or the equity shares are going to be given. And then the cash outflows or the purchase of the land and buildings, and also the investments, long-term investments are going to be taken for the investment activities. When we look about this financial activities, they are going to be taken towards the cash flow relating to the financial activities, and it is going to be predicting about what is the financial activity and being containing about the total that is changes during the designated financial period from the 1st April to 31st March. What are the transactions that are being recorded towards the current period with respect to the owners or the lenders of the company, and whether it is a profit or not, they will be able to analyze from the financial activities. So this cash inflows and outflows are part of the financial activities. So similarly, like the investment activities, they are looking about the financial activities. So procurement of loans, the proceedings from the bonds and the investments, and the other things are being noted down here. The financial activities such as the preference shares, buyback of the shares, redemptions of the debentures, and the payments of the dividends are taken as the financial activities. Next, looking about the operating activities, it is the amount in which they are going to be operational activities are going to be taken into consideration in looking about the operating activities. This is going to be giving the activities of the accounts which is taken from the income statement, and what are the incomes received and what are the expenses that are incurred has to be taken into the operating activities. So this in this cash inflow and the outflow will depict about all the operating activities, the proceeds from the sale of goods and other services to the customers, receipts from the royalties from the consultations and other things, the payments for the expense purchase of the inventories from the suppliers, payment of the expenses and payment of the loans are also going to be considered here. So there are methods how to calculate about the cash flow statement. So here in this cash flow from the operating is going to be taken, where they are not going to be considering about all these items. Non-cash items are not going to be considered, such as the depreciation, discount on shares, and items that has to be classified. Investing or financing are not to be shown in this method. So if you take this format, this is the format of the cash flow from the operating activities. So they are stating from the cash receipts and from the sales, the commissions and other receipts that are being issued, and the cash payments are going to be made, highlighted here, such as the purchases and the payments, operating expenses, interest paid, direct taxes paid, and from that they are able to arrive the final of the net cash from operating activities. Next, in the operating indirect method, where they are stating with relating to the not net profit from the profit and loss, we are able to ascertain about the net profit and loss, and then they are able to make the adjustments about the depreciations, the loss on sale of fixed assets, loss on investments and other things, and the operating profit is going to be recommended here. Adjustments, what are the various adjustments that are being highlighted here, the inventories, etc. And then we are taking about the cash generated from the operating activities, and then what are the interest paid, the tax paid. Then after they are taking the net cash from the operating activities. So this is the another indirect method to calculate about the cash from the indirect activities. On the whole, this fund flow statement and the cash flow statement is going to be giving you the whole wide summary about the funds inflow and the outflow, where in the fund flow statement we are looking about the statement of changes towards the working capital position of the current assets and the current liabilities, and preparing the adjusted profit and loss account, what are the adjustments related, and then after the fund flow statement is being prepared to show about the sources and applications of the funds. Whereas if you take about the cash flow statement, we are stating only about the cash activities, and the cash inflows and outflows are being given here, where they are being classified into the three categories, such as the cash from investment activities, operating activities and the financial activities. And finally, the cash flow statements are going to be prepared through the both the direct and the indirect method for finding out the net cash from the operating activities. I hereby thank the Bharat Institute of Higher Education and Research for giving me the opportunity to share this session. Thank you.